Bob, a very good morning to you. Welcome back to CNBC.
Morning, Dan. Nice to be here.
First of all, let's talk about why you're here in Abu Dhabi and what brings you to the SALT conference. What's the opportunity?
Well, this is a long-standing place for me. I think even in the 2000s at Barclays and our asset management business, BGI, as well as our investment bank and Barclays Capital, relationships here were very important. I think back to the growth of ADIA and sovereign wealth funds here. And the very, very strong relationship between ADIA and BGI, which was really the leader in U.S. institutional equity. So it goes back many, many years, and it's always good to be back. Of course, this year it's the first time for the SALT conference. Anthony Scaramucci has done good conferences around the world, never in the Middle East. And from the delegate numbers that I'm hearing bandied about, I think it's going to be a great week.
Tell me about the work that you're doing with AMC now, because more than 10 years on since the GFC, why do you see financial services as being a compelling sector to lean into? What's happening here?
Well, when you look at the opportunities to do private investing, so many sectors are highly valued, overvalued, fairly valued. Both the availability and the cost of leverage is getting higher or more difficult depending on which way you're looking at that. In financial services, valuations are still below the levels of 2008 and 2009. There are very few private investors focused on that sector. And I think what we underestimate is the size of the financial services sector and the importance to the economy. You know, behind government and behind real estate, financial services is the largest sector in most of the big economies. So we think the opportunities in financial services are all of those things. It's based on low valuations and not a particularly crowded field of investors.
And is there a specific opportunity that you're looking at here in the Middle East right now?
There's nothing in particular. It's a very interesting question because most people come here to raise money to invest in the rest of the world. And one of the things we're going to talk about on the panel today, which is talking about the potential for Abu Dhabi as a financial center, is inward investment. Is there an opportunity to be investing in domestic or regional banks and insurance companies, as an example?
I wanted to ask you about the situation back in the United Kingdom because Boris Johnson, Jeremy Corbyn are going to the polls this week in an election that will ultimately determine the outcome for Brexit. How are you reading this, and is this Boris Johnson's to lose?
So, to give a little bit of background, I voted Remain. I'm a dual citizen in the U.S. and the U.K., so I want to make that clear. I think today we need to move on. I think Brexit as a decision has been made. I think the optimist in me sees not just a majority for Boris and the Conservatives on Friday, but more importantly, a workable majority, so that with a workable majority, I think we can complete the decisions and the agreements on Brexit before the end of January. And then, as you know, we'll have a full year of implementation for whatever the new trade arrangements between the UK and Europe are. So I go into this week optimistic. We've probably been here before, but I think it feels good. And I certainly support Prime Minister Johnson in his efforts.
So banks in the UK want certainty, but all they've had up until this point is uncertainty. Should investors watching this be worried about what the UK banking sector is going to look like in a post-Brexit world?
Well, I think there's two questions there, Dan, so I'll try and separate them. Business in general, or the private sector in general, and financial markets need certainty. And I think in the UK, if what we just talked about comes to fruition and we see a workable majority on Friday, I think that'll give a jolt of confidence, and I think it will be very good for the private sector overall, for jobs, for the economy. I think in banks, they'll benefit from that, the UK banks, but they also are working in a regulatory environment where the UK has committed to ring fencing, to completely separating the domestic businesses from the international businesses. And I think that's still somewhat of an impediment to those banks in the UK that have businesses around the world.
I wanted to ask you about the situation in the US as well. We've got a pretty fast-moving story this morning with regards to Democrats who are set to make an announcement on articles of impeachment against the president. Do you see a House impeachment, at least, as being a key risk for markets?
You know, it's funny. As you look at the U.S., it's one of the positive signs to me. I continue to see a very confident private sector in the U.S. The private sector economy is doing well. Jobs, we saw the numbers last week, are very, very strong. But listen, we're going into an election year. If you look back over the years, at this point of an election year, we probably didn't know anything in terms of what's going to transpire over the course of the next year. So, we just had Mayor Bloomberg enter the race a week or two ago. I think it's very early in the process right now.
You think Trump's going to get impeached?
I don't. From a political point of view, is there something that's going to happen in the House? I think that's probably likely. Is there something that's going to happen in the Senate? Probably not.
Biggest risk to markets in 2020, a black swan event. What do you think it is?
So I'm pretty confident on the overall economy, but I guess there's two things that I worry about. Can any of these trade war discussions go wrong? Certainly being here in the Middle East, you recognize that the importance of trade with China for the Middle East, the importance of trade with Japan and China. Where is the U.S. going to be in terms of resolving the trade discussions with China? I think that's probably number one on my list. Number two, and it may be 2020, it may be 2021, but at some point we need to begin to worry about the proliferation of credit. One of the very positive things that's happened over the last 10 years since the financial crisis is the quick reaction of monetary policy and lowering interest rates. But I worry about the $17 trillion in negative interest rate bonds, and we worry about the overall size of the amount of credit that's outstanding now.
All right, certainly a lot to watch. Bob, we'll leave it there. Thanks so much for joining us today on CNBC.
Thanks, Dan.
That's Bob Diamond there from AMC and the former CEO of Barclays. It's back over to you.